Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with T.G. Watkins, director of stocks over at Simpler Trading, also editor of the Profit Pilot website. Now, TG, look, it's been a pretty strong risk on, I think we can call it, market over the past month or two. A lot of things kind of broke down in that late October stage, but hey, November has been a pretty strong month. The S&P up about 9% just in October. But that does have a lot of people saying, well, that could be too aggressive of a move. Everyone's on the side that the Fed's going to start cutting rates. And quite frankly, it seems like a lot of money is just rotating back into the markets in still a select few sectors, but it's not just a couple stocks that's leading everything higher. So, TG, in terms of the setup that we've seen right now in that strong month of November, what does that mean for December and into the new year in your eyes?
Well, I do think that we're in a pretty much full-on bull mode. I mean, that's hard to ignore what just happened in November, and we are seeing broad-based participation. Everything's doing well. The S&P is doing well. The Nasdaq's doing well. The equal weights are doing well. The IWM is doing well. In fact, over the last week and a half, we've seen the IWM explode higher while the Nasdaq pulled back, and I think that is an indication of what's going on with risk and appetite, that I think that the market sees that the idea of lower interest rates is kind of like coming up in 2024, and so the market's getting ahead of that, and they're pricing that in, and so they're going for the small caps and maybe rotating out some of their flight to safety vehicles, which are the mega caps. So right now, obviously the market is just so overbought. The internals are pegged to the bullish side just the way that they were pegged to the bearish side at the end of October, and that's what helped fuel this kind of rally. So I'd like to see something calm down. I'd like to see opportunities and entries. The Nasdaq is pulling back in a very nice, graceful way. The SPY should be next. I'd like to see the IWM kind of, I don't know, chill out a little bit. A lot of these things, we've got some crazy names going up there, and it's not sustainable. But I like what's happening, so we just kind of need to let things kind of calm down, pull back, flag a little bit, and just find the next opportunity.
Yeah, TG, it has gotten a little excessive on the buying, but it's been nice to see, and it seems like across the board, almost everything is getting a bid. I want to go back to the small caps though here, the IWM, the rocket ride move it's had, just really coming out of those lows in October. You were talking to us a lot in September, well, really, and even in August and September about it looked like things were rolling over in the market breadth. Some of the breadth indicators you had weren't looking so rosy, and then they got to the point where they almost seemed like a contrarian buy. Now it seems like the market breadth has improved some under the surface and that you are seeing the small caps playing ball. What does that mean to you when the small caps are outperforming the larger caps when you look at the market breadth and some of those other indicators you look at, like the put call ratio?
Yeah, so that kind of started it since you were bringing back the summer around, well, actually at the end of July, I was saying, hey, we really do need another breather. We need to pull back. Now, I didn't expect that the market was going to pull back for 3 months, but when the breadth indicator was so high and the put call ratio was so low at the end of July, I was like, look, guys, a pullback is needed. We need to refresh. It turns out to be 3 months. Okay. Now, hopefully, we don't get the same thing here. I mean, hopefully, because right now the put call and the breadth indicator are reading the same exact levels that we got back at the end of July. Okay. So, really, really pretty frothy right now. We need to see something. I hope it's not another 3 month pullback. That would be kind of crazy. But we do need to see something as far as just we can't, there's no more room to go to the upside, really. We have to see things kind of cycle around. We need to see some room to breathe. What does that exactly look like? I don't know. We never know. But we're just going to have to wait and see what that looks like. I mean, look at Boeing. Boeing is straight up. I mean, you can't keep buying something like that. We are starting to see some names run into a little bit of resistance. Like, I'm looking at Roblox. It's kind of stopped moving up. Looks like it wants to come back. Roku has had a huge move too. I can't buy it up here. We have to wait for it to come down. I mean, a ton of these names have exploded so high that they haven't even touched their daily 21s in forever, like in weeks. And we need to at least see them come back to that and give us that opportunity. LMND is another one that I'm looking at. I've been watching it. It's kind of been moving up. It's crawling up over the last 2 weeks, but I'm not willing to buy it here. I need to see a dip. I need to see something. In fact, as an example, if you look back at July 7th on LMND, that pullback to the daily 50 is kind of what I'm looking for right now. I want to see if that's going to happen over the next few days or a couple weeks. We just need to get opportunities, and right now the market is too high to be providing those opportunities. So We've been pulling off some really good trades and keeping our powder dry, building up our dry powder supply, and waiting for the next opportunity.
Okay, so you mentioned the 21-day moving average. What are some of the levels? What are some of the chart levels that you are watching for broadly on a number of these stocks that have taken off that would be a stopping point that you would start to deploy some more capital, almost a buy the dip mentality?
Yeah, well, for example, since the Nasdaq has kind of been leading the way on the way down, it's already tapped its daily 21, while the S&P is just now starting to kind of get into its daily 8 EMA. So I have a feeling, and this is just a thought of mine based on how these things are going to move. I have a feeling that if the SPY goes down to its daily 21, then the Nasdaq is probably going to break its daily 21. And I think there's a gap on the Nasdaq. If that happens, my guess is the Nasdaq could fill that gap to what, 378 or so, and then that might bring the S&P down to kind of a previous consolidation level of about 450. Again, these are just kind of guesses of mine, but I think that might be what happens. And as far as the IWM, man, this thing is just so frothy. I wouldn't be surprised if it kind of comes back down to its previous level that it was flagging at, which was about 178, 179. I'd be willing to kind of see that and see if it goes sideways for a little bit. But with the IWM having its daily 50 still below its daily 200, this is all at what I call a first move. Like November, even though it's crazy and how big this was, it's still just the first move. Now I'm looking for the pullback. And if this pullback is into support, it's going to set up what I call the second move. And that's going to be the bigger, better, longer move. So for as much as we thought November was good, if this goes the way I typically see these, then whatever the pullback into support actually turns into should be bigger and better and last longer.
Okay, so it sounds like it definitely will be a buy the dip opportunity when it pulls back to support, because you see the next move as even having longer legs than the move we just saw. That's pretty exciting to look for, and it gives people an opportunity to, like you say, deploy some dry powder when the time is right. Another sector, though, that has been quite frothy as well and has really taken off has been the cryptocurrencies. You look at Bitcoin, and for the longest time it was in the mid 20s, and then it got into the 30,000 range. It finally got up just a couple months ago and was kind of hovering around that 34, 35,000 level. Well, it's broken out now. It's now in the above 40,000. It's been around 44,000 the last couple of days. What do you make of this recent surge in cryptos? Is it tied to those moves in the small caps and the more speculative animal spirits coming back into the markets?
Yeah, of course, definitely. It's definitely tied to interest rates. It's definitely tied to all that kind of stuff. It's tied to risk on appetite. I mean, these are the things that we're looking at that are telling us that the market is now planning something or factoring something in and excited and totally okay with it. Now, on another note, I can't confirm this. I don't know. I haven't read it too much, but I just wonder how much of this might be also a concern. The newer generation kind of seeing what's going on with our financial institutions and our debt and conflict around the world, and they're more interested in actually putting their money in something that they trust as a financial thing, which is Bitcoin, because it's decentralized as opposed to, say, the dollar or gold or anything else. Like you just kind of have to think about what is our current generation, the young group, what do they trust? And they may not trust some of the things that previous generations have.
Well, we have also seen a bounce in gold, too. Gold over 2,000. Even the gold stocks started to get a bit of a buy, but we all know how disconnected those have been from the underlying gold price. So is gold also getting that same buy because of maybe it's the older generation moving into it, much like Bitcoin's move?
Yeah, I definitely think gold is on its way, and same with the gold miners. Now, I don't know if it's because of the dollar or because of real interest rates. I'm not that knowledgeable about these things, but I do look at the charts, and I'm seeing a lot of really good things. I'm looking at AU. It just did a double bottom, and it's back over the daily 50. Even looking at GDX. The weekly chart has set up. The weekly 8 has crossed over the 21. The Moxie indicator is up. We have price back above the weekly 50. Heck, we even have GDX back over the daily 200. Now, I think that there could still be a little bit more chop and flag, but I mean, these things have turned around. I mean, you look at GDX from August to November, we had an inverse head and shoulders. And we can look at something like GFI. GFI is looking absolutely fantastic. The monthly chart looks great. The weekly chart looks great. The daily chart just last couple weeks ago bounced off the daily 50. Everything looks fantastic, and these are actually starting to pull back. I would start looking to buy dips in gold, the gold miners, stuff like that. They're looking fantastic.
Well, let me throw another resource at you that's been all over the place, TG, and that is oil and the oil stocks. If you look at oil, it's been on a wild roller coaster ride all year long. It was up above the 90s for a while, 92, 93. Now it's down at 70 today. And when you look at the two big ETFs, XLE and XOP, love to get your thoughts on it because they've rolled over pretty hard. Are we getting near a point where you see some support coming in, or is this a longer term trend?
No, I think it's going to be a longer term trend. I actually called the top around August, September because it came up there, basically, hit previous highs, hit the weekly third ATR, all that kind of stuff, and then it chopped around for a little bit and continued breaking lower. Now, I'd say last week, maybe a week and a half ago, I did make a video on my Profit Pilot page and my YouTube page saying that, hey, maybe there's a bullish setup happening because price was down here at a double bottom. It was kind of flagging. And I said, I'm seeing some divergences. Price is sitting on the monthly 10, the weekly 50, like a lot of support, the daily 200. And I said, if this is going to hold up, this is what I need to see. And primarily what it was is I needed to see price get over the hourly 50 and then engage with the hourly 50 and start moving up. And I've been showing basically this week since the move happened that right when it should have held the hourly 50, it did not. And that is your clue. That's your answer. When you're looking for something to happen and it doesn't happen, then there's a failure of a setup and you need to see that, recognize it, be okay with it. It was from that moment that it just broke. So that must have been on Monday. So Monday needed to hold, call it like 138 on XOP. And that was the hourly 50. And when it didn't, then that started the downtrend. It broke the previous low that had been flagging for a couple weeks. It's breaking the daily 200, it's breaking the weekly 50, and it's breaking the monthly 10. So it's in a downtrend. It's a resumption of the downtrend until we see otherwise.
So TG, is the time of the year right now, coming up to the end of the year and into the holiday season. Does this impact how you trade any stocks or any sectors?
Bullish, as far as seasonality, maybe with oil or something like that. No, I don't really pay attention. But yeah, I mean, the end of the year is going to be bullish, but that doesn't mean it's going to be all the time bullish. Like the market is so pegged to the upside right now, we're going to have to just blow some of the steam off. And so we could, and everyone talks about the Santa Claus rally. The Santa Claus rally is kind of a moving target, and it might only happen for 4 or 5 days. So it's not like this full-blown thing. It doesn't always happen right around Christmas. It just means that generally there's going to be some sort of rally towards the end of the year, and we can have a pullback leading up to that. So that's one of the other tricky things. We could actually have a 10-day pullback, and then we can have a 4-day move, and that would be considered a Santa Claus rally. So just right now, watch for pullbacks, and then see if we can catch something towards the end of the year to be bullish. And then honestly, I bet January is probably going to be nice.
Okay, so people maybe put too much stock in the Santa Claus rally, but maybe we need a Grinch that stole Christmas corrective move in some of these first before we see another Santa Claus rally. Well, what about, is there any sectors that you see that haven't really participated as much that maybe are set up to go, or are there any sectors you're seeing that are already rolling over and already ahead of the game as far as a corrective move?
Now, let me look at the arc. Now, actually, really, there's a lot of stuff that's participating. China's the only thing that I could think of right now that is just really not doing much. Let me look at solar. Solar has been in the dumps. Now, the only thing I could say about solar is that maybe it's finally reached rock bottom, because what we've also seen is jets also reached rock bottom, and then they totally spun around over the last couple weeks. I mean, yeah, November. I mean, you look at jets, which is the ETF for airliners, and it's gone straight up, but it also went straight up after going straight down, which is just, I mean, this thing is, talk about a Z pattern, like a Zorro out there. So yeah, maybe solar, but I have a hard time playing some of that stuff. LabU, which is biotech. Biotech is now on a tear. Again, I think all of these things, the majority of things that I'm seeing that are running are really usually related to interest rates. Like biotech, they need a lot of capital in order to stay afloat, and so they care about lower interest rates. And so I think that is why LabU and some of these other things are starting to perk up. I mean, like crypto, same thing.
All right, TG, enough said here. Look, I guess we're just waiting for a pullback, seeing where this pullback or cooling off period moves to, and then what could be another even stronger leg higher into next year. Again, it all comes down to some of the levels that potentially will be touched in the next maybe few weeks, couple weeks even, for a wide range of markets, because look, everyone has gotten quite bullish on these markets and on a wide range of sectors. November was a good month. December, who knows if it's going to keep going, but we all know what you're doing now. So I really do appreciate highlighting that. TG, thank you very much for your time. We'll chat again in another few weeks. I hope you have a great rest of your week.